Thank you all for joining. This is a webinar series with the Flexport webinar series, and we are going to talk today about how to protect your company from customs dangers. I am Brenda Espeleta. I am the Vice President of Customs here at Flexport. I am a licensed customs broker, and I've been in the industry about 30 years. And I first want to say thank you again for joining. We hope that you will find this session informative and useful. It should be rather short, probably 20 minutes, 25 minutes of slide presentation, and then enough time afterwards for some Q&A. For those of you that would like to ask a question, you will need to type that into the Zoom question box. And the last thing I want to say before we really begin is that this is not legal advice, and if you need legal advice, we suggest you contact one of your internal experts, and we'll go over through this webinar who some of those people are. So we're going to talk about common mistakes in brokerage and import. And the part that I've always loved about customs brokerage is that every day you get a chance to learn something new. And that is because everything changes in this business. If you're new to the process, you always have things to learn, or if you've been in it a long time, you still have things to learn. We are going to help you try to be aware of what those common mistakes are in the industry and how you can help your company avoid them. First and foremost, the point is you need to know what you're doing, and a lot of the government agencies that are involved with imports make it easy for you to help figure out what you need to know when you import products. In this business, we now have Google, and Google is our friend because you can find an awful lot of information on the internet today. When you're unsure, you should always reach out to customs experts. And actually, US Customs defines who those experts are. They start with a licensed customs broker. They include consultants, and I would emphasize you want to have consultants that are experts in your commodity or your business and international trade. And lastly, they end with attorneys and legal counsel. If you are in a really dicey situation, you'll probably want to involve an attorney. So the first mistake we'll talk about today is not researching the import requirements for your products before you ship. I would like to emphasize that it has to happen before you ship, because in some instances you cannot get the necessary license or permits or have the certifications that you need after they have departed the exporting country. So how do you know what those are? Well, as I said, you need to do some research. And the main entity that you think about when you think about importing into the United States is US Customs. But US Customs is really the gatekeeper for many other agencies as well. And some of these are showing on the screen. The government agencies that regulate imports and participate in customs computer system known as ACE, the Automated Commercial Environment, are now called participating government agencies because they're connected to that system. But the key point for all of this is that typically US Customs will not release your shipment at time of import if you are failing to get a release from one of these other government agencies that regulates your commodities. The typical ones that cause problems for importers that are not in the know about their commodity are the Food and Drug Association, the US Department of Agriculture, specifically with the Lacey Act, the Consumer Product Safety Commission, and we'll go over some of the products that they govern, and lastly, the Fish and Wildlife Service. And these, of course, are not the only agencies that govern imports, the ones that we've shown on the screen. They're just typically the more common ones for products that are imported that govern those shipments. So some examples of some products that these agency regulates: the Food and Drug Administration. You might think by the title it's foods and drugs, and actually it's a misnomer because they don't actually regulate all food. Certain food is regulated by the US Department of Agriculture, and they do regulate far more than just foods and drugs. It's medical equipment, cosmetics, goods for animals to consume, radiation-emitting products such as microwave ovens, lasers, sun lamps, and lastly, if I didn't say it already, cosmetics. Okay. The Food and Drug Administration does have requirements for those specific commodities, and they've done a great job with having a pretty extensive website to share with you the details that are needed at time of imports. It can be complicated, and the Food and Drug Administration is one regulatory body that will hold merchandise. They can actually ask for samples, and they also send them to labs for further evaluation. If you don't have your ducks in a row for the Food and Drug Administration, you may be at a point of having to export your goods out of the US, destroy them under customs supervision, or really do a manipulation and withdraw the infringing merchandise from the rest of the merchandise. All of that's an expense that if you investigated before you shipped, you could avoid. The USDA has a relatively new regulation called the Lacey Act that covers wood and wood products. And the aim of the Lacey Act is to prevent illegal harvesting of forest. Items included that are governed under the Lacey Act are things that are made out of wood, such as furniture, wood veneer panels, even tool handles that are made of wood. At time of import, if you're importing product that's covered by the Lacey Act, you will need to report the genus and species of the raw wood and the country of harvest. The idea behind the Lacey Act and what it's prohibiting is the illegal deforestation of protected lumber and timber. And you might remember in the news was Gibson Guitar, who paid a fine and forfeited profit or products to the tune of $600,000. Another example of fines for the Lacey Act with a big name company that you might remember is Lumber Liquidators. They actually were fined $13 million and put on probation. So it's serious business. The other agency that covers a broad range of product that also has the ability to examine, hold, even seize merchandise and require destruction is the Consumer Product Safety Commission. They cover, again, all kinds of products, and their reason for being is to prevent the public from unreasonable injury or death caused by the use of one of these products. Things that fall under their jurisdiction include children's toys for the choking hazard, the stability of bedroom furniture for the fallover hazard and injury to children, flammability of children's pajamas, and the list really goes on and on. Anything that, again, could injure a consumer in the US. The regulations require that the importer issues a certificate and it must accompany the shipment if the CPSC governs the products being imported. The certification standards are spelled out in the vast regulations of the CPSC, and the good part is they have a great website. So again, if you can do some research before you ship your products, you should know what the regulations are and what sort of documentations need to accompany your import transaction. And lastly, the agency I want to talk about is the Fish and Wildlife Service. They have, again, another broad base of commodities that are covered. They also allow imports only into specified ports. So you need to be careful if you're shipping fish and wildlife governed merchandise that you're only shipping it to one of the Fish and Wildlife Service ports. They have in place merchandise which requires permits to import. And if you need to get the permit, it can take 30 days or longer before it's issued. So you certainly don't want to be in a situation where your shipment is sitting in port in the US and you find out you needed a Fish and Wildlife permit, because you're now going to have that shipment sitting there collecting storage while that permit is being issued. A new regulation, relatively new for the Fish and Wildlife Service, is the CITES requirement for rosewood. That was effective January 1st, 2017. And if you import products made of rosewood, which is now considered an endangered species, you will have to get the permit. Some of our importers that are a little unknowing at time of shipment get caught in a dilemma with Fish and Wildlife, and some of the products that are surprising to the client that need a Fish and Wildlife permit are things like mother of pearl buttons on wearing apparel. Again, mother of pearl is a species that's covered by the Fish and Wildlife Service. So these were just some of the other government agencies that can cause problems and delays at time of imports. And what we're cautioning our clients to do is research before you ship. The bad consequence is you may not be able to import your product after it's here. You may have to ship it back or destroy it. And what do you do? Again, the agencies have some very good information on their websites. They also provide telephone numbers to help you figure out what agencies govern your import product. Mistake number 2, not exploring the full range of possible classifications for your product. Classifications, the harmonized tariff number, is a coding system developed by the World Customs Organization, and almost all nations that trade with one another participate in the harmonized tariff. How do you know which harmonized tariff is correct? Well, again, the websites. The U.S. International Trade Commission posts the harmonized tariffs online, and U.S. Customs also posts what they call a database of cross rulings online. That is where you start. It's as easy as finding the website and typing in the name of your product. But you have to do a little research yourself before you can identify the appropriate harmonized tariff. Reading rulings is one way to educate yourself about how customs determines classification. It's determined according to the general rules of interpretation, also called the GRIs. And when you read rulings, you'll see that customs is applying the GRIs in determining the appropriate harmonized tariff. But you'll also see in reading rulings that there are many gray areas, contradictory decision, and a lot of nuance within the rulings. This example on the screen is concerning relatively new technology, a Wi-Fi video doorbell. And really, in reading rulings, their new merchandise that was Wi-Fi enabled was falling into the 8517 classification. However, older rulings showed that doorbells should be classified as 8531, and there was a huge difference in the duty rate. So in the research for this importer, they made a calculated decision that instead of requesting a binding ruling for customs, they were confident the code should be 8517, and they were ready to support that, but they didn't want to ask for a binding ruling just on the slight chance that customs would disagree. So in this case, they made a calculated decision to choose 8517 at a duty rate of free versus 8531 at a 1.3% duty rate. What's the consequence of not doing the research? Overpaying on duties. How do you figure out what is the correct classification? Again, you have to become familiar with the harmonized tariff system, and you have to read some rulings on cross database, okay? If in doubt, you can go to customs for a binding ruling, and we'll talk about that in just a minute. The problem with the harmonized tariff is that it lags behind current technology. And that will always be the case just by how they have to put the harmonized tariff together with the World Customs Organization. It takes years to add new sections and new headings to the harmonized tariff. Mistake number 3 also involves classification, but this is a problem about not keeping an eye on newer rulings and changes that take place in the world of international trade. Years ago, 2015 and prior, cell phone cases per customs, per their rulings, were to be classified in heading 4202, which calls for containers and holders, such as those things you would find for binocular cases, camera cases, and gun cases. And they carried a 20% duty rate. The other option for a heading was for other articles of plastic, and that carried only a 5.3% duty rate. So prior to 2015, Customs ruled that cell phone cases were in fact containers, and they fell into heading 4202, as they were similar to the examples in the heading, the gun cases, the camera cases. And in Chapter 39, Note 2, it specifically excludes containers of heading 4202 from falling into heading 3926. However, all does not end, and the world always changes. So OtterBox, a familiar name in cell phone cases, took the case to court. And the court ruled by picking apart the colons and the semicolons within the heading and exploring something called explanatory notes, which further detail headings and what's included in those headings in the harmonized tariff. And they decided, the court decided, that they would first have to deem what was meant by the phrase container. So they looked at things that are considered to be containers, and they decided containers are used to store items away when they are not in use. And therefore, cell phone cases that are being used when the phone is in use really are not containers. So the court overturned Customs' opinion and allowed cell phone cases to be classified in 3926. But wait, Customs, as recently as July 2017, issued a new ruling that said if only one of the 4 factors is present in 4202, then the items are classified in 3926. But if 2 persist, then those items would be classified as containers. And the items are if the cell phone case organizes, stores, protects, and is used to carry. So the case that went through on the ruling changed again a classification for a cell phone case from 3926 back to 4202 if the cell phone case did more than one thing, which was protect, and that was to organize. So in the example of the ruling, the cell phone case had card slots for credit cards and business cards, and with that, Customs deemed it again fell into 4202. So word to the wise, don't classify and forget. Stay on top of rulings and court cases. Customs can change classifications if the entry is not liquidated, and that could go to your benefit or to your detriment depending on which way the pendulum is swinging. You need to do, again, the research, and again, the website is the place to be. Additionally, a recent court case spoke about tariff engineering, and that is changing a product to meet a harmonized tariff that carries a lower duty rate. The recent court case involved Ford and their cargo vans. And what Ford did, a cargo van classification is heading 8704 and carries a 25% duty rate. Ford put seats in the back of the cargo van, knowing that after they were imported, they would remove the seats from the back of the cargo van. But by putting the seats in the back of the cargo van at time of import, they were able to classify the cargo van as a passenger van with 2.5% duty rate. Again, the court case recently went through on this, and the court agreed that tariff engineering is a legitimate means to reduce the duty. So lessons learned here: become familiar with the harmonized tariff, stay on top of ruling changes, and read a little bit about those Court of International Trade changes. Mistake number 4 is probably one of the most expensive mistakes and the worst areas to be in as far as I'm concerned. Anti-dumping and countervailing duties are really punitive duties that any member country of the World Trade Organization has a remedy at their disposal. Anti-dumping duties are charged when a foreign manufacturer sells goods at less than fair value, and countervailing duties are for the same thing, for selling goods at less than fair value, but the foreign government had subsidized that manufacturer. Anti-dumping and countervailing duties are priority trade issues for the United States Customs Service. You may recall that President Trump at the beginning of the year also called on the government entities to improve anti-dumping and countervailing revenue collection. And there is a relatively new enforcement act called Enforce and Protect that also puts more focus on anti-dumping and countervailing duties. I'll give you a brief overview of how it works for those of you that are not familiar. Essentially, a US industry makes a claim to the government that they are being harmed by unfair priced imports. The US government does investigation. they actually send questionnaires to foreign manufacturers of the product in question. Those manufacturers and exporters answer the questionnaires and return them to the US government, or they may not. At that point, the Department of Commerce makes a preliminary determination that, in fact, goods are being sold in the US at less than fair value, and they will set a preliminary rate based on the manufacturer of that item in question, and typically have an all other rate that is the highest rate. The preliminary order is placed, and when you import, you are assessed estimated anti-dumping or countervailing duties at the preliminary rate. The government continues to investigate the circumstance and may take years till it finalizes and publishes a final order with the resulting anti-dumping or countervailing duty rates, again by manufacturer, and a bucket that is typically the highest rate for all other. So, for example, you imported solar panels during the preliminary rate period, and your manufacturer is not identified, and the all other rate that's claimed at time of entry is 30% additional duties. However, the anti-dumping is still being investigated by the US government, and years later they may decide that the appropriate means of injury is 80%. So they will liquidate your entry many, many months, years after you imported it, and you will get an additional bill from the US Customs Service for owed anti-dumping duties from a transaction that occurred years ago. If you find out your products are covered by an anti-dumping duty investigation, you also need to understand the scope of that order, and the scope details the products that are covered with that, but they can be very complicated. Many of the cases have scope rulings that come out every couple of months to further clarify what's covered or not covered by the anti-dumping duty order. And the hardest problem for importers when they have goods that are subject to anti-dumping and countervailing duty is by the time the case is finalized, that product is long gone from the importer's shelves, and they have no way to recoup by increasing the cost to their end customer of that product. So anti-dumping and countervailing duties are certainly the scary area for an importer to be in. And a note to the wise here, if your commodities are covered and you are claiming anti-dumping at time of import, make sure to file that non-reimbursement statement. If you fail to do that at time of liquidation, your entry will be liquidated at double the anti-dumping duties. Okay. There are implications also with anti-dumping to your bond, and it may be difficult for you to get a bond. The issue with that is that until that entry liquidates, the bonding company is the fallback should the importer not pay the increase in duties to US Customs. So those importers from 5 years ago may be out of business. They may have already declared bankruptcy. It is then the bonding company who is obligated to pay this increase in duties to US Customs. What products are covered by anti-dumping duty orders? This increases every month, and some common problems are bedroom furniture, wooden bedroom furniture from China, pencils, aluminum extrusions, and this is the one case that has back and forth, tons of scope requests because no one knows really what's included in an aluminum extrusion, and solar panels. And where do you find out if your product is governed by anti-dumping or countervailing duties? It's the US Department of Commerce website or US Customs. The last mistake I would like to talk about is really underestimating customs just in total. US Customs has one of the, if not the biggest database of information on trade data in the world. They have been collecting statistics for 25 years, and with the advent of the ACE system, they have a much better means to use that data analytically, and they can pinpoint problems with suppliers, with shippers, with importers, with country of origin, with cost, with different harmonized tariff numbers, etc. So if your friend that imports from the same supplier is not using the same harmonized tariff number, or if another importer is claiming anti-dumping duties and you're not, that data is within customs system. In addition, customs has also organized themselves around centers of excellence and expertise, and they're honing in on commodity-specific expertise with the customs personnel. There are a number of centers of excellence and expertise strategically located around the US. And if you go to customs websites, you can see what those commodity-specific experts are. And with that, again, those customs personnel are drilling down into the data analytics and highlighting the importers who are not doing it right. We see requests for information from customs based on the fact that a new importer is, again, falling out of the data realm that they have in their Big Brother database. So what can you do to protect yourself from underestimating customs? Well, if you're an importer, customs allows you to set up your own ACE portal account. You can look into the entries that are filed. You can find out if other brokers are filing entries that you know nothing about. You can see if the requests for information are sent to you. I would strongly suggest that everybody get their own ACE portal account. And the other item that I would strongly recommend is that you keep your records. The customs broker is required to keep records only for 5 years from date of entry. If you have anything that has anti-dumping duties, that liquidation date can extend for years, so you'll want to make sure you have your records. So what happens if you underestimate customs? They may come after you for a penalty for negligence, gross negligence, or fraud. In the worst case scenario, they can actually file criminal charges. So the recommendation is tell the truth. Tell the truth on your documents, tell the truth with your customs broker, and of course, do your own investigation on the commodities that you're importing. So let me open it up for some questions. I have a question here. Can you let me know how a bond amount is determined? My broker advised I need to increase our bond amount, but I'm not sure why. The general rule for determining the customs bond amount is that it is to cover 10% of the duties outlaid in a year. And that's if you have what's called a continuous bond or an annual bond. However, customs always has the option, depending upon the commodities that are being imported, if they can raise that bond amount. And typically, the big bonding companies in the customs area have the mathematical calculations figured out, and they will alert the broker that the importer's bond looks like it's not meeting the requirements of customs. So typically, if you're using one of the larger surety companies through your broker, that is why the broker is recommending you need a larger bond amount. Here's another question. Would it be advisable to send U.S. Customs a non-binding inquiry for what we intend to import? U.S. Customs will only offer binding advice when it is requested via what's an official binding ruling request. They rarely give non-binding advice. You may be able to get a customs person on the phone, but you would already have had to done your research and offer 1 or 2 suggestive tariffs and the reasons why you feel your commodity falls in that category. So U.S. Customs, as a policy, does not issue non-binding harmonized tariff numbers. We received a CF-28. What is our best course of action? A CF-28 stands for Customs Form 28, and it is the actual official form that Customs request information, and often within the body of that form advises the action that they will take. There is a timeline to respond to a CF-28, and that's the first thing you need to do. If you can't respond within the timeline spelled out on the form, you need to contact Customs and ask for an extension, and they may offer that to you. But in all cases, you should answer the CF-28 as thoroughly as you possibly can. And depending on the issue highlighted, you may decide that you need to do some further research on your part. And again, depending on the nature of those questions in the CF-28, you may need to contact an attorney. Okay, sometimes the CF-28 is the first hint to the importer that Customs is viewing past transaction in not the best of light. Lastly, since we're getting close to 45 minutes here, how can I manage my own import compliance program? That's a great question. It's nice to see that importers want to know how to be more compliant. First and foremost, it'd be great if clients would hire people that have past experience. Typical importers that are doing it right put together an import compliance manual that outlines the processes and the procedures that they take within the compliance department. They also sign up for the ACE account and vet what they find out on the ACE accounts to their records that have been provided from their broker. And I think that's it. We're going to have one more question and then we're going to wrap it up. This question says, which agency should I check with for importing articles of clothing for adults or kids but not infants? Clothing, again, would be the Consumer Product Safety Commission. Typically, they do only cover wearing apparel for children. But if you just peruse the CPSC, you might see that there are things if you're doing any wearing apparel that is non-flammable or other than just base wearing apparel, they may cover it. Okay. And I guess the last question is, Will the recording of the webinar be available? And I'm getting my coworker here shaking his head. So yes, you get to listen to this again. So thank you again so very much for participating. I hope you join some of our other Flexport webinars. Our goal is to educate you for how to be a better importer. Thank you.